Hi there, I'm Tyler Bollhorn. Welcome to the Stockscores market analysis for May 17th, 2010. Let's start off this week with a look at a shorter term view of the Dow 30 chart. We can see that the upward trend was broken. We had a number of breaks. There was the first break, we had another one there, and then of course we had that big sharp sell-off. And in the last few days we've had some weakness, but today was a pretty important day, that being Monday, because the market was weak in the morning but came back to close actually up for the day and very near its high of the day. When markets rally back from strong weakness, it's a sign that the sellers are exhausted and that the buyers are taking back control. And so it looks to me like we're building a little pennant pattern in here, and that may lead into some stability over the next little while, which is really what this market needs. Now the Canadian dollar did a similar move today in that it also came back from weakness, and that is really demonstrates what's going on here. What happened was the US dollar was strong on the open, and I'll show that in a chart in a moment, and then it fell off through the day. Well, that helped stocks. That was an indication that some of the fear was coming out of the market, and so I think that the US dollar has good potential to move back up towards the 98-cent mark in the near term, but still is relatively a neutral chart right now because it's stuck in that trading range. Now on gold, over the last 3 days, we've seen a little bit of selling pressure. Nothing major. Really all that gold is looking to do now is come back to its longer term upward trend line. So I've drawn the trend line there for you. And really gold ran away from that trend line, and now it looks to me like it's going to work its way back to it. The long-term picture for gold is still relatively strong, but expect some short-term weakness, particularly if the US dollar starts to go down. That's a sign that some of the uneasiness about what's happening in the world is going away, and with more confidence in the market, we should expect gold to pull back in the short term. Now oil is an interesting chart because it's really been pummeled over the last few weeks on the fact that the US dollar has been strong, but also given the potential slowdown in the economy worldwide because of problems in Europe. It is nearing a number of support areas. We've got some support right here. It's already made its way through the support area at that price level. So we're kind of dancing around a price point where oil should bounce. I think there's a great trading opportunity in oil this week because it should make a little bounce back in the short term. I would watch the 15 or 60-minute intraday charts of the oil ETFs and look for that bounce back over the next little while. Now I'm showing here a very long-term chart of the Nasdaq 100 because I want to put the recent weakness that we've seen in context. When you look at this, you can see that since March, this market has been in a pretty strong upward trend, and although we've certainly flirted with that upward trend, we haven't made that decisive breakdown through that upward trend line. All we've really done is pulled back to the trend line, which is what is supposed to happen when markets run away from trend lines. So I'm not ready to call this bull market over yet, although certainly when you think about where resistance is longer term, what we should expect in the near term is that this market will at best go sideways. The S&P 500 chart is very similar to the Nasdaq and to the Dow, and again what's important is that today it came back from weakness. It's doing that from a higher low than the previous low of last week. And so we may be seeing here a little turning point. Each wave in the market, up or down, is getting less intense. That's a sign that investors are building some confidence. I think there's a good chance the market just moves into a sideways trading range through the summer, which is okay. Individual stocks can do well in that environment, but you do have to be a good stock picker in a sideways market like that. The Canadian market has been relatively strong compared to the US markets, although today it was a weaker market on Monday. However, when you look at this chart, it really looks like a much healthier chart, and I think that the Canadian market can be healthier longer term. And finally, this is the chart that the market seems to be revolving around now. The upward trend line, we could draw it something like that. We've really run away on the US dollar index from that upward trend line. Today it hit a new high, closed below its open. I think there's very good potential that the US dollar will fall back. That will help stocks bounce, that will help oil bounce, and that'll probably take some of the steam out of the gold market in the next little while. So in general, look for some stability to return to the market this week, but don't expect anything of great strength in the near term. That has been the Stockscores market analysis for May 17th, 2010. For more information on the tools and services offered by Stockscores, I encourage you to give us a visit at www.stockscores.com. Have a great week in the market and trade well.